प्रेजेंटेड बाय ईबिक्स कैश। हर खुशी के लिए काफी है।
Hello and welcome. You're with us on this special show, LIC, the Great Indian IPO, where we take an in-depth look at the upcoming issue and all that goes into it. I'm Abha Bakaya and with me, Siddharth Zarabi. First, let's take you through the headlines. Stock markets plunge, Sensex down 3% or 1,747 points, Nifty down 532 points. Investors lose over 10 lakh crores in just 2 days. DRHP files speculation now over what the share price of LIC will be. Analysts expect the price band to be anywhere between 1,700 and 3,400 rupees. Axis Bank set to buy Citibank's retail business in India. Deal likely at $2.5 billion. Transaction subject to RBI approval. More turbulence ahead for SpiceJet. Kalanidhi Maran rejects the airline's 600 crore rupee settlement offer in Supreme Court. Says will not accept anything less than 920 crores in the share transfer matter. Tata's bring in a new commander to pilot Air India. Former Turkish Airlines chairman İlkan Ayçi appointed the new CEO and MD to take up the post before 1st of April. And even as CBI investigates the ABG shipyard scam, the country's largest ever corporate fraud case, Finance Minister gives the biggest lender, SBI, the benefit of doubt.
Thinking professional banking people who are sitting and looking at it. They're not doing it for anybody's sake. They're doing it for proper professional conduct. So I think we should allow that to have its full play.
The stage is set for India's largest IPO ever. The Life Insurance Corporation of India, or LIC, has filed its draft share sale prospectus with market regulator SEBI. Though the price band at which the share will be sold is not known, the proposed share sale has quotas not only for retail investors but also for LIC policyholders.
It will be the one IPO to rule them all. A public issue which can only be addressed in superlatives, which will truly test the depth of the Indian stock markets and the financial appetite of the Indian investor. The entire proceeds of the offer will go to the central government and help it raise around 75,000 crore rupees or nearly $10 billion. With just a month and a half remaining for the fiscal to end, the LIC filing late on Sunday evening set in motion the much-awaited process, the government's plan to sell a 5% stake in the insurance giant. Here are some key facts about the issue. Government is divesting just 5% of its stake in the company. Over 316 million shares will be sold. Of these, 35% or 111 million shares have been set aside for retail investors. Another 10% or 31.6 million shares will be given only to existing policyholders. Though only a small number of the 290 million policyholders can expect to get the shares.
There is a positive buzz in the air that the government has committed itself and it's showing it. And because the way in which, in a way, it has been tailored, policyholders are going to get a share, retail investors are going to get a share, and there's this biggest IPO coming out. So there is just an air of positivity which is so required when you're doing some things with the stock market.
There are still several unanswered questions. First, at what price will the LIC share be sold at? Expected value per share will range from 2,560 rupees to 3,413 at 3x to 4x multiple. At conservative multiple of 2x to 2.5x, value per share is rupees 1,706 to rupees 2,133. Second, how much money is LIC raising from the market? Could be anywhere between 60,000 to 75,000 crore rupees. Thirdly, will LIC be more valuable than even Reliance Industries? Possibly. Interestingly, it was on Business Today TV that the much speculated LIC valuation was first revealed. For a week, it was the only authentic figure in the market.
Once listed, will LIC be amongst the top 3 companies in India by market cap?
Our embedded value is upwards of 5 lakh crore.
The price of the IPO will be decided 2 days before the issue opens. Both policyholders and retail investors are to get a discount of the issue price, which will be decided later. However, the biggest concern is that the LIC IPO could suck money out of the capital markets, resulting in more manic Mondays like this year's Valentine's. Bureau Report, Business Today Television.
Let me welcome in our guests. Joining us for this discussion today, we've got Subhash Garg, former Finance Secretary, Ajay Srivastava, CEO Dimensions Consulting, and Prateek Agrawal, CIO ASK Investment Managers. Gentlemen, thanks so much for joining us. Before we dive in, Siddharth, this has been the most widely anticipated IPO, not just for meeting the government's or contributing to its divestment target, for the fact that it's going to be a major listing on the exchange.
Absolutely, Abha. You know, I never believed till a few years back that you could even do an IPO for LIC. And I believe it's the change that we have seen in terms of the approach towards disinvestment and getting a behemoth up ready for listing, 650 plus pages, a wealth of information, Abha, is absolutely spectacular.
Well, let's take a look at some of the numbers, because one of the most talked about numbers, of course, is that of the embedded value. And there are a lot of different kinds of permutations and combinations that are being looked at currently. As Siddharth mentioned, a 600-page document, and after going through it, analysts have come up with a whole series of possible scenarios. Now, we're looking at an embedded valuation which is currently, at the moment, if we take a look at around 5 lakhs, 1.5 times would be about 8 lakh crores. That's possibility 1. Second possibility, if it's 2 times, would be about 10.8 lakh crores. Remember, the issue size would be 5% of this. 2.5 times would make it 13.5 lakh crores, and 3 times price to embedded value would be 16 lakh crores. That gives you a sense of the scale of the issue that we're looking at this time around. This is going to be a bigger IPO than we've ever seen before. It's bigger than Paytm, which we just concluded at the end of last year, and it's been compared to global giants like a Saudi Aramco and so forth. So it is something that is quite extraordinary for the Indian stock markets.
Absolutely, Abha, and in fact, one of the key things that we all need to keep into account is not just the size of the IPO, but the levels of participation. And I want to begin with you, Ajay Srivastav. You must have seen some of the fine print. Tell us what it really means, not just for individual investors, but in terms of what has been happening in the markets. 10 lakh crore of investor wealth wiped out over 2 trading sessions, and now we have this massive IPO, what we are calling the Great Indian IPO. Ajay.
I think it's going to be a great challenge for the IPO to come in this market, given what's happening on the Ukraine front, oil front, our local economy, all put together. And it's all a function of how they price the IPO, because that's more important, because this is basically it's a PS. We can be I'll be honest to say I will buy the shares in all my portfolio for the retail side. But as an investment thesis, this is a PSU competing in a very, very competitive market in India. And we have seen the last 1 year has not been the best for most insurance companies. So therefore, one looks at a longer term scenario. How can a PSU compete in a scenario that there are so many private players? It's a big question mark on the investment. What's going to happen to this company, valuation, and so on and so forth. So I think there are lots of plays happening here in terms of where this company is going to go, because given the experience what we have with the other PSUs, even their monopoly, they're not doing so well. They are bought for basically dividend by everybody. LIC will not be giving any major dividend because they have an issue which we'll discuss as the program goes along. It cannot give any major dividends as time goes by because it needs to give at this point of time for the shareholders and for its own reserves.
And
So
last 2 years,
therefore, what do
Ajay,
we
the
expect?
dividend has gone into shoring up the equity base.
Correct. So there's a bonus issue kind of stuff which has happened to the dividend. That's why the shares are 632 crore shares in the company. So therefore, for as an investor, if I'm buying a PSU share, leave aside the thing about LIC. It's a PSU at the end of the day, and not much has changed in terms of the governing structure of PSUs, the talent pool that they have, the salary structure that they have. So when they compete, will they give us value? And I think I'm hopeful they'll give us value. But somehow or the other, the sinking feeling about BSNL, MTNL, who had monopoly, keeps coming back to haunt me. That I hope it is not that. For the country's sake, we will all subscribe to the shares upfront. But for the future, I think a lot depends upon how LIC responds to competition. Well, we all keeping our fingers crossed. We wish it well, but trepidation is there that such a large IPO in this market, will it become a Reliance Petroleum? I hope not.
Well, at least you've sounded all the warning bells as well, Ajay. It's important to do that. Prateek, let me come to you. What about the embedded value? Let's talk about that. We've seen an increase, perhaps because of the way it's changed how it shares profits with policyholders and shareholders. What do you make of the kind of valuation we're possibly looking at and the kind of interest it's likely to attract? I mean, how is this going to impact secondary markets?
No, so at any given point in time, a large IPO does suck in liquidity from the secondary markets. People have to make space for it. It is a large IPO. It's an attractive IPO. They're growing well. They command a dominant market share. And as of now, what the sense is, it's being priced quite okay as well. So people will make space for it in their portfolios, which then means that they have to sell something that they are holding, and secondary market sees some amount of pressure. So that's the near term. However, what also happens is that such an IPO will bring in another crop of new investors into the market, and the momentum of new first-time investors into the market could see an acceleration. That, to my mind, is a structurally good thing to happen. We, as an economy, have a very small representation of retail in the market that could expand. If I go back into history, something like that happened when the Maruti IPO happened. And while yes, in the near term it caused some amount of ripple, but medium to long term, that was the point from which the market started to do well. The same could happen this time around. Keeping fingers crossed, such a large IPO, it should happen. It should happen successfully. It should list successfully, so that people who are coming into the market for the first time experience some positivity, and that could help the market in a big manner. It is not only LIC, it is also an NSE issue which should be happening. And yes, till it happens, like I said before, it's one of the points which the markets have to digest. The markets following the earnings kind of thing that we always talk about would happen only after such large issuances have been digested.
Right, right, right, Prateek. Subhash Garg, coming to you. And this is a question in the context of the monopoly that LIC had on the insurance business ending almost 22 years back. There is a 5% float. It is going straight away into the government's coffers. But there are people who are asking, will it change the way LIC functions? Will it lead to an improvement? And I dare say, does there need to be any improvement in the way LIC is run as a government corporation?
I think before I come to this governance question, whether there would be change in LIC's functioning post the IPO, logically, structurally, it doesn't seem to be the case because selling 5%, 5% of the shares does not change anything in terms of the board management or the governance. If you read the DHRP, which the LIC, and it's a very well detailed DHRP. It speaks about that in governance, nothing much would change. The government would continue to drive, they will continue to follow all those policies, directions, because 95% ownership would still be with the government. So I don't expect, but let me point out the basic things, basic facts about the IPO, I think, which we should keep in mind.
Right.
So the details which have been put out in the DHRP, the profit per share is only about 4 to 5 rupees per share, right? And now, if you think of any multiple, let's say 60 or even 100, any price beyond 4 to 500 would be excessive by any standard. There is a lot of discussion in the DHRP about some of the shareholders' money from even the participating policies.
Right.
Some shift will take place, but that shift would be small. It would not change the EPS from, let's say, 4 to 5 rupees to 15 rupees.
Okay.
So even if you take it maximum to that,
Right.
and you price it 50 to 60 times, any valuation beyond 450 per share would be, to my mind, very difficult.
Okay.
So that would put, so the crucial question in my mind is, what is the price which the government determines?
Mr. Garg, since you are talking about price, let me take that point with Ajay Srivastav. Ajay, what should LIC share be priced at? What is fair value according to you, given all the numbers that you have seen so far and the size of this behemoth, which still controls well upwards of 60% market share?
Well, I think, you can ordinarily say, yes, it should be done on the PE multiple basis, but since it's coming to the market the first time, it's got significant market share and that can be expanded if somebody runs it correctly. I would still believe that the pricing should be somewhere around 2 times embedded value. I think if it's higher than that, I think it'll have a problem in the market. If you make it 1.5 or 2 times, at least you've given room for the investor to see something off the table. That's it. The second part, more than the price, if you ask me personally, is the clear intention of the government. Will it offload another 5% in the market next year? Because the overhang of the government sale of any share, doesn't matter who it is, which share it is, the overhang of the sale can kill the price itself. So if I know that the government is not going to sell the shares for 3 years, I can live with a higher multiple. But if I know that the government is going to come with another 5% next year, then I have to just pare my expectation down, because then if the supply keeps coming to the market, then I need to find fresh buyers for those shares.
So
and
Ajay,
therefore the multiple...
Ajay, break it down for the average viewer who may not have that much exposure to the markets. Are you therefore saying that there is a risk that the government will do another float next year and that will depress the share price?
I think so. This should be, looks like a logical follow-up, because it was supposed to be closer to 10%. Given the market is looking like a 5% dilution, and it's the easiest thing for the government to do next year to bring in some resources, is to put another 5% on the block in the market. And that's a fear which investors should worry about, because if more supply comes to the market, naturally the price of the share gets depressed in any scenario, any company
what's fair
whatsoever.
value according to you, Ajay?
I think if it's closer to 1.5 times embedded value, which is the value, embedded value is what is the present value of all the future profits of the insurance
So let's
company,
bring
all
up
the
that
policies.
chart again. Bring up that chart again. We have 4 different valuation scenarios, viewers, for you to consider. There is, of course, a view by some analysts who are talking about 4x, but we won't even go that far. Just for your reckoning once again, at 1.5 times 8 lakh crore, 2 times 10.8 lakh crore, 2.5 times 13.5 lakh crore, and ABHA at 3 times 16 lakh crore. And just before you take over, ABHA, I just want to remind you, viewers, that the first news break of the embedded value came on Business Today, came from Disinvestment Secretary Tuhin Kanta Pandey at a recent roundtable that we did post the budget, which is where he spoke about the embedded value being upwards of 5 lakh crore. And that, Abha, sets the stage for what I would perhaps pitch in here as you ask your question. Is the government being conservative given the overall market conditions, Abha?
And that's just it, and I can see the reactions on all our panelists. But Mr. Garg, let me come to you, because yes, clearly they're trying to ensure retail participation. That's clearly one of the things that they're keeping in mind. I'm sure the time that they were planning the DRHP, markets of course were very robust. We've only seen this volatility in the last few weeks, and in fact the finance minister said that to us at the recent BT conclave. But Mr. Garg, there are several concerns, let's say, around whether or not LIC will be able to command that kind of premium, whether it be because of, issues like the fact that it hasn't always been in the public eye in terms of all its financials. Those will still be new. It's only otherwise had financials in the public eye like once a year, concentrated business in a few states, low digital marketing, and of course the possibility of further fund infusion in IDBI Bank. That's definitely one of the things that analysts are flagging off. Do any of these things worry you?
Absolutely, but the biggest worry which I have is, you see, we should always look at from the point of view of the investors. What is it for them?
Exactly.
I can understand the government getting 50,000 crores or 1 lakh crores or whatever, that's for the government. But the investors is where who is the most sort of interested person in this. What is on its in the share for him is what we should think about. That is where the price multiples, etc. I was saying, if you sort of embedded value is not something which is very much of concern to the investor.
Sure.
So what is the dividend I would get, or what is the capital appreciation which I get, is what concerns most. And that is where the multiple is very important. So I am quite sort of convinced that any multiple which is beyond 60 or 70 will be very difficult to make the retail investors interested. And if that is so, in that case, a valuation about 3 to 4 lakh crores, or at best 4.5 lakh crores, which is multiple of 1, would be very, very difficult to sustain the interest.
Okay.
And what you also referred, Abha, about the kind of thing. So look at whilst they have lost 36% share in the market, but look at the individual premium business, which is the core.
Right.
There the LIC share today is only about 30 to 33%.
Right. There you have it, the great Indian IPO, an IPO which is going to determine the trajectory, not just of the government's disinvestment program and LIC's future, but also the trajectory of the Indian markets, coming at a time when there is a bit of nervousness and skittishness in the market. The LIC IPO could be a trendsetter. With that, it's a wrap on this special, the Great Indian IPO. Thank you very much for watching.